This is Tom Lee. Buy this stock in 2025 and never work again.
Market. Now, in case you don't remember what a V-shaped recovery is, it's basically what we saw in COVID. When March came and COVID basically became a thing in 2020, the market dropped like 20-30%. And then 2 months later, we were in a huge, massive generational rally. A V-shaped recovery is a very violent event, but it's actually a very, very happy event for investors. And that's the sort of volatility that makes a lot of money for people. But the main point of this video is not that V-shaped recovery. We'll talk about that in a second. He actually said that one stock in particular, he singled this stock out, will perform better than the entire stock market during that V-shaped recovery. And today, you're going to hear what that stock is. In fact, you're going to hear it right now because I don't hold you hostage. So don't click nothing, don't smash nothing, don't buy nothing. The stock he's talking about is Tesla. If all you needed is the bottom line, here it is. We'll never, ever hold you hostage. But I urge you to listen to the man himself. We're going to roll the little clip right now. And then I'm going to add my analysis. But more importantly, after my analysis, we're going to build a strategy together, given the entire set of circumstances we're faced with and this very choppy market for the next 6 to 12 months, the game plan, so to speak, for the next year of how to handle this very, very unstable market. You definitely want to stay for that one. But first of all, the man himself, Tom Lee, let's roll the clip, and then I'll come back with my analysis. Let's get it.
In 2018, which Michael was talking about, the spike in the VIX or the collapse in investor sentiment or consumer confidence, that all happened around February 2018. So really that coincided with that first low that was made in 2018, and the market began to stage its recovery. I don't blame any business or investor for saying, look, there's so much uncertainty, I can't make a decision. I think that's why Rick Reeder's talking about animals in hibernation. But as we start to think about the second half of this year, first of all, we've already had the collapse in sentiment. We've seen $850 billion of cash raised over the past year on money market balances. And then in the second half, we're looking for possibly tax reform, which really propelled stocks in 2017. So I think that the odds of a V-shaped recovery in stocks that come after April 2 is just extremely high because we've already sequenced a lot of the panic that people saw in 2018. I think it's already taken place.
So what would you be buying right now?
Well, to us, I think Exhibit A for a V-shaped recovery is going to be Tesla because it's really been one of the most controversial stocks, and it's been caught in that sort of political maelstrom of Doge and Elon Musk's involvement in the White House. And I think it's already recovered more than 15%. But I think if Tesla is leading us into this balance, that's a bull case for Mag 7 to be the group to own in the next few months. It's been a self-amplifying downturn, right? Because we've been worried about AI as a bubble and the CoreWeave IPO at a time when we have tariff uncertainty. So I could see it as a very convenient reason why investors have actually avoided Mag 7. And it's been the group that kind of really led the downturn. But it is a cyclical trade too, because I think once investor confidence returns and they're going to start to buy stocks, the Mag 7 are not only the best companies, but they're the most liquid and they've really derated. The focus right now is on April 2. So I think the market has a lot of myopia around getting tariffs and tariff clarity. But we know that tariffs are just one part of the administration's goal. There is reducing regulatory cost, and then there is extending tax cuts. I think as investors start to think about that for the rest of the year, that gets them quite excited. And of course, I think we have a lot of what I would call spooled energy. Investors can't stay this bearish. The VIX can't stay this anxious. There is a lot of firepower and dry powder on the sidelines. And I think businesses can't stay cautious forever. I mean, once they know the ground rules, I think they're going to actually start making decisions.
So Tom Lee is actually saying...
That's interesting. So he was saying investors can't stay on the sidelines. I mean, I think the only people who can't stay on the sidelines are asset managers because they are required to put their money into something. But you aren't. You are not. You and I are not required to put our money into anything. If you are in a situation where you are not feeling like the stock is working for you, if you cannot find opportunities to buy, you don't have to do anything. You can sit on cash as long as you want. You can sit on cash long enough where it starts to give you bed sores. Let's say that. You can sit on cash for years. Now, does that mean that you're going to miss opportunities? Yeah, for sure. For sure. But it also means that when a market is like this, when this is a market that's very difficult to trade in right now, you have a risk-free trade. You have an absolutely risk-free trade. I saw a comment on the YouTube video one day. It said, you know what, Chris, thank you for opening my eyes. That cash actually is a trade. Yeah. All stocks are bad. All stocks are bad, but every once in a while they act right. So if you're paying attention and you're watching the market and you're looking for these opportunities, every once in a while you will find something like Tesla when it's moving in its stage 2 uptrend. That is not right now. It is not right now. In fact, this, to me, I've been telling y'all for a hot minute, looks like Tesla went through the whole market cycle. What is the market cycle? It starts with stage 1 down here. Stage 2 is this uptrend that everybody loves to trade and thinks they're geniuses when they finally catch something on there. Stage 3 is the top, where it starts the moving averages crossing back. And stage 4, which is where a lot of stocks are in 2025, and why you are probably feeling anxiety, denial, panic, capitulation, anger, depression, disbelief. You're probably feeling a lot of these emotions these days. But you don't have to. And that's why I am so stoked to continue to share my knowledge with you, because you can sit on cash for as long as you need to. And are you going to miss opportunities? Yes. But you're also going to make sure that you miss these giant losing moves where you see a stock that goes up a 100% move, and that stock goes back 100% back where it came from, completely round tripped.
Hey, look, folks, we've been through this before. This ain't our first rodeo. In fact, what's happening right now is very similar to what happened in 2018, just 7 years ago. We had a huge February drop-off, and then the market bounced back a lot quicker than people thought because of the same circumstance we have right now, which I'll elaborate about in a second. But basically, if you look through the numbers, Tom Lee is not blowing smoke up your butt. Now, in 2018, the market was at 2,800. That is the S&P 500. That was February of 2018. Then the market drops 200 points to 2,600. Pretty much almost identical to what happened for the past few weeks. In 2 months, the market...
So I've got the monthly candles pulled up here. And we can see it ended January 2018. This is the SPY, not the SPX. And it went down about 6.5%. So, we talk about the outlier trend template, the 10 over the 20, price over the 50. I'm even on the monthly candles, and you can see trends like this. Pretty cool, right? So what he's saying, we had that 6.5% pullback here, and then the rest of the year it went really hard back up. How much higher did it go? Here to here, went up 9%, but it did end the year down even more, down 13%. And I mean, its low was way down here, down 19%. I don't remember what was going on in 2018 to have caused all this. Maybe Tom will talk about it. But this is a difficult market to trade. Is this what we're going to see in 2025? It may be. Look at 2017, though. These are monthly candles. That's a lot easier to trade, isn't it? That's a lot easier year to trade. So if we go from here to here, an 18% move. And this is what I mean when I was talking earlier, is that I believe that people got really complacent in a market like this, which is what we had in 2023 and 2024, right? You look on this side, January of 23 started here, ended up at the end of 2024 at 56%. 56%. That's why buying the dip worked during that time, because it was going up like gangbusters. And you look at 2018, real choppy, really hard to trade. 2022, down 25% at one point. Ended the year down 19%. These V-shaped recoveries can happen. Absolutely can. But you always have to keep in mind, we don't know how long it's going to take. We don't know where the bottom is going to be. But we can be risk first by making sure that we know where to get out of trades instead of holding on to them, hoping and praying that it comes back, right? From the end of 2021, the very beginning of 2022, it was only until January 2024, so 2 entire calendar years, from the January 22 to January 2024 to get back to break even at that point there. And that's on a like straight V recovery. It could take you ages to get back to even. Ages. If you get in at the wrong time and then don't know when to get out. But you know when to get out.
Market dropped from 2,800 to 2,600, and in April of 2018, we were pretty much where we are right now. Very, very similar set of circumstances. Now, of course, history doesn't always repeat. And the fact that this happened in 2018 doesn't mean jack diddly squat. It doesn't guarantee that it's going to happen again. But we are students of the game, so we will study history, right? So then, from this point on, basically the market rallied to 2930 in September of 2018, which means people made a lot of money riding from 2600 to 2900 in about 6 months. Not bad. Now, here is where it gets interesting. Then another bad cycle came, and the market dropped from 2930 to 2500 by January of 2019 in about 3 or 4 months. Again, people panicked, people sold, just like they did in February and April of 2018. But then, just 1 year later, the market absolutely bounced back from 2500 to 3400 in a single year. So, given all this choppiness, like short term, a lot of volatility from 2018 to 2020, right? Absolute insanity, a lot of drops, a lot of craziness. But if you look overall from the highs of 2018, which is 2,800, all the way to the end of the 2-year cycle, we ended at 3,400, meaning the market did 21.4% in 2 years. Guess what? Literally the average of the S&P 500, about 10% a year. So what Tommy is saying here is that the short-term choppiness you're seeing in the market right now, the volatility is not something unusual. It happens all.
It's not that unusual. You're right. It's not all that unusual to have choppiness. But do you want to hold through this? Right? Let's go back to the daily charts. Do you want to hold through this, or do you want to just like sidestep it, go do something else for a couple months, and then come back in? And this is the very best example I can ever give you. We're going to do a multi-symbol view. We're going to look at SPY during COVID. I love this example so much because we all lived through this. Hopefully you lived through this. Right? If you're here today, you probably lived through it. I'm just saying. We all lived through this, where the market, this is COVID time over here. The market sold off so hard. It was down 35% peak to trough, right? 35%. There were people screaming all the way down, buy the dip, buy the dip, buy the dip, buy the dip, right? All the way down, they were screaming buy the dip. But the crazy part is, let me remove all these circle annotations, right? The people who bought the dip right here, thinking, oh, here we go. It's going back up. They thought they were geniuses, right? The market always comes back up. It's gone down. At that point, it was only down 12%. Buy the dip. It did go back up. But then, as we know, it continued on down. However, if you wait for the outlier trend template to reverse, the 10 over the 20, price over the 50, on this side, where was that? I would say it's about right there. Like I say, you might lose a buck or make a buck. But here's the deal. Those people who bought over here, let's say they bought on that point right there. You were already up 6%. While these people were pulling their hair out, losing their marriages, everything's going wrong for them. They're still down money all the way on this side of it. You wait for the outlier trend template, you're up. I mean, you could have got in any point on the way down here. But the point is that you would be up 6%, where they're just breaking even. I love showing that example because it really helps illustrate how in 2025, as the market's going down, we can see a lot of similarities between these 2 points. Am I calling that it's going to be a 35% pullback? No, because I don't do that. But it does have a similar trajectory right now, doesn't it? It does look very similar. So if somebody's telling you, hey, now's the time, buy the dip, buy the dip, buy the dip, right here, they may still be down when the dip is over, starts turning around, and you start putting on your positions, and you might even be up 5, 6, 8, 10% before they're even back to break even. So buy the dip, absolutely. But when the dip stops dipping, when it's on the opposite side of the dip, to Vincent's point, yeah, take a break. Just take a break for a while. There's no rush to get into this market. A market like this can be very difficult to trade, even from somebody who's been doing it for 15 years. So holding cash is a risk-free trade when the market is all risk on right now.
All the time. He just gave you 2018 as an example. If you stretch it out long enough, you're always going to get back to 10%. There's always a reversal to the average. It's the same thing that Jake Bogle was preaching. It's the same thing you see in basketball. If you look at the NBA, the best shooters in the NBA, when they shoot three-pointers, right, from beyond the three-point arc, well, the best shooters, they shoot like 40%, right? A shooter can have a bad stretch of games, let's say 20 games, in which he shoots 30%. But then what's going to happen at the end of every season? He's going to have a really, really good stretch of games in which he'll shoot 45, 46%. He's going to end up with 40% on the season. There's always a reversal back to the average, and the average is undefeated. And in the
There's not always a reversal. In fact, let's go back. Right, we had this period here. Let's go back to the one chart. Because it was, in fact, let's go to weekly candles. It'll be a little easier to illustrate some things here. Right. So from this high, 2021, took the end of 2021. So it took 2 entire calendar years to make that back. This COVID sell-off here, it took from February of 2020 until August of 2020. So that was 6 months right there. This pullback right here took how long? September of 2018 to April of 2019. So 8 months. And that's what I'm trying to tell you is that you don't have to hold through this. You don't have to. You can start establishing positions on the other side. Come on, where's my clickers? Clickers are not so clickable today. There we go. You can start establishing positions on the other side of these moves and be up. You can be up money. You can be profitable when these people over here are still hoping and praying that maybe one day it'll come back and you're already up money. Yeah. I mean, we can go back, let's say right here. From May 2015 to July of 2016. So that's an entire calendar year. An entire calendar year. Does it always go back up? I mean, realistically speaking, yes. The market has always gone back up. But here's the deal, is that you can be up money on the other side. You can be finding new opportunities because you're in cash rather than holding this dead money from October 1st of 2007 until April 15th of 2013. That's 5.5 years. 5.5 years. So has it gone up in the past? Absolutely. But you don't have to hold it on the way down when you can hold it on the way back up and be up money. Whereas the people who have been holding it the whole time, losing their hair, stressing out like crazy, and wondering and hoping one day it'll come back.
Particular case of the S&P 500, the average is 10% per year. There's always going to be that pull back to the average. Now, obviously, we're coming off the heels of 2 incredible years that were well above the average. We did 60% 2 years, so obviously there's going to be a correction. But then again, nobody said the correction has to be immediate, and right away in 2025, we're going to correct back to the 10% over 3 years. Hang on. Now, he's also making a very interesting point. He says, look, folks, I understand why CEOs and professional money managers, they're a little bit wary of what's going on right now. The uncertainty makes them basically freeze and not do nothing until the smoke clears. That's just a normal thing to do when you're managing other people's money. You have a fiduciary duty. Totally understandable. But what he says is, look, I'm an analyst. I don't have that duty, right? To me, as an analyst, I'm seeing that the odds of a V-shaped recovery, basically the same thing we had in COVID, when in 2 months the market bounced back like crazy after the initial COVID drop, that is a very high chance given the speed at which we dropped, given the negative sentiment that went from euphoria to total extreme fear in just a couple of weeks, that massive drop, the flow of money into money market accounts, lots and lots of money. Basically, people flee the market right now. They absolutely don't want to do anything with it. And he says that when this happens so quickly, historically speaking, when everybody expects negativity, when everybody expects a recession and a crash, that rarely happens. In fact, he says, look, this is a contrarian signal. Basically, when everybody's fearful, I'm greedy. That's not me saying this. That's not even Tom Lee saying this. This is literally Warren Buffett. A contrarian signal is when everybody's expecting recession, everybody's expecting crash. Usually the opposite happens. Now, of course, I'm not guaranteeing that the opposite will happen. I don't think Tom Lee is making that guarantee as well. But I'm saying this is a contrarian signal. I've made my money doing exactly that over the past 15 years. I've been buying when people are fearful, and that was really, really rewarding for me. The last instance was 2022. Again, we can't have a video without me talking about Palantir, but Palantir in 2022 was at $6 per share when everybody was fearful. I was buying, and so were my friends from the Palantir community. That's why we made all this crazy money. Now, again, Tommy basically says, look, short term, everything's going to hinge around the tariff sentiment. Whatever happens with the tariffs on April 2nd, it's going to be the short term catalyst of where this market goes. Sure. But he says long term, it doesn't matter what happens with the tariffs because this administration has a lot of other plans that are bullish catalysts for the stock market, like a tax benefit reform, like a complete cost cutting from the government, which will flow back the money to the market. A lot of good that's going to come out of this government, allegedly, according to me, that basically will be more powerful, more impactful than any trade policies. Now, he also thinks, and he said it multiple times before, that he believes that Donald Trump is not going to go full tilt with the tariffs. He's not going to go ham. He's basically going to either make a deal or completely kind of let it slowly phase out and just claim victory. We'll see about that. In any case, what he also says here is that, look, the market can't stay tense and volatile for long. It's very, very hard to remain tense. Now, if you were in a sticky situation ever in your life, initially for the first 2 minutes, you're absolutely tense. And then you start to relax because your body can't stay tense like this for 2 hours. It's impossible, right? The same thing with the market. Basically, Tommy says, look, at some point, the market has to chillax. Now, as far as Tesla goes, this is the stock he singled out. Of course, he also said, look, the entire Mag 7 is going to outperform in this V-shaped recovery. But he says, look, Tesla is going to be better than all of them because the level of drop in Tesla, the level of negative sentiment and how far and how fast it dropped because of political shenanigans, basically is going to be like a rubber band. It's going to be like, when it's going to release, it's going to outrun.
That's really interesting because I talk about the rubber bands type of moves inside of Outlier all the time. And the way I get that is on our fear and greed heat map down here. And I've mentioned this many times, is that when it gets really fearful or really greedy, look for the snapbacks. Look for the snapbacks. And right here is a good example, right? The buy signal that came, you could have made a ton of money before the fear and greed peaked. And then once it peaked and started to contract, that was an exit signal. And as you can see, it went a long way down after that. And then right down here, this huge sell-off down here on the fear value down to 4. Right, 4 is extreme fear. In fact, we have some new graphics. Let me see if I got them ready yet. Where is it? We have some new graphics. Down at 4 will put you well down in extreme fear. I don't have all the graphics lined up yet, but it should be there later on. Well down in extreme fear. And that absolutely can and did snap back just like that. So I completely agree. And you hear me talk about it constantly. But that doesn't mean it's the time to buy. It can snap back, but that does not mean it's the time to buy, right? Because that's counter of the trend of the stock, counter of the trend of the market, and just makes a really, really, really hard opportunity.
Everything, because these political shenanigans and short-term hate in Tesla have nothing to do with robotics, with FSD, autonomous driving, robotaxi, energy, and basically that whole thing is absolutely independent of Elon Musk political shenanigans, which in themselves might just end up being a whole lot of nothing. We'll see. And if you look at the fundamentals of this company, Tesla is pretty solid. I mean, they went from $62 billion of revenues just 3 years ago to $98 billion of revenues just over the past 12 months. That's a 60% increase in 3 years. Their $34 billion of cash is absolutely insane, 2.5 times more cash than debt.
Right. And to this point, you can come up with all these great fundamentals. You really can. You can come up with every reason in the world why the price should be going up. But the problem here is that the market tells you they don't want to own it. And you have to start listening. Because if you are an investor or a trader or anybody who's putting your risk on in the market, and you see these great numbers here and you're like, oh, the price should go back up. I got news for you. Only price pays. Right? They can have the best fundamentals in the world, but they're not going to pay you until the price of the stock goes up.
They actually scored 80 on our stock MVP scorecard, which is one of the highest score we have for a stock historically. And short term, you look at the short interest of the stock, it's under 3%. So professionals who are basically betting against companies, not betting against Tesla, only 3% short, basically means that only 3% of investors are betting against Tesla in this scenario. Nobody's saying, hey, this is a really good time to go against Tesla. In fact, if you look at the year-to-date performance, this is where the secret of Tesla reveals itself. Year-to-date, the stock is down 30%, which is unpleasant. But over the past 12 months, the stock is down 50%. And over the past 5 years, the stock is down 720%. So a lot of this is short-term pain. And I get it. People absolutely.
And these signals in Outlier, let me take a look at it real quick. I mean, just following the buy and sell signals would have got you 475%. just following the buy and sell signals right here on the chart, right? But then you layer on other things like the market trend, the market breadth, all that stuff, right? You can do even better.
Absolutely have this bias. When the stock goes from 0 to 100 in a straight line versus a stock that goes from 0 to 400 and then back to 260, the first option is more conveniently set up for them. They feel a lot more comfortable with the stock that gone from 0 to 200 versus the stock that went from 0 to 400 back to 250 or 260 in our case. That's just human nature. That's called anchoring. People are anchored to the Tesla price of December, which was 440, and now the 260 looks bad. But if you zoom out the past 12 months, they're up 50%. I mean, it's not bad.
Oh, okay. Okay. But I also think that people who are still bullish on Tesla at this point have also anchored themselves to that. Like where these order blocks are up here, they've also anchored themselves to that and saying, oh, it should go back up, right? The company is great. The fundamentals are great. They may have differing opinions from the CEO who's doing his thing. And we're going to talk a lot less politics because I got a lot of feedback on how much you guys hate politics, and that's fine. So the CEO is angering a lot of customers, a lot of potential customers, previous customers, potential new customers. And there's all of this political backlash that's come against him and his company. But still anchoring to this price up here, that may not do anything for you, right? You may be anchored to that for years and years and years. So here's what I want to start doing. I want to start looking at what is the market telling us, right? And the way that we look at what the market's telling us, and this is going to be part of our new morning routine, is looking at the master key. So let's take a look at what the master key, what is the market telling us? So today we have a buy signal on the SPY. Let's go take a look at that. Let me close a couple tabs up here. So the SPY is currently sitting on a buy signal that came on March 28th. So I did see someone ask about that in the chat. What does a buy signal within a downtrend mean? Does that mean it's time to go long? I disagree. A buy signal within a downtrend should be considered a time to take off your shorts. Take off your shorts. If you were shorting the market, now may be a great time to close your shorts. A buy to close is what that would mean. And then looking at the heat map value, it's currently sitting at 34, which puts us where? 34 puts us in the fear category right here, between 25 and 50. So people are fearful on the market right now. But it looks like they're getting a little bit less fearful. But we'll have to see how this plays out because the market's still down another 1.5% today. And it's got a couple order blocks that it's sitting on. So we have a buy signal, meaning potentially closing shorts. The market trend, bearish is all get out. Your 10 is under the 20, price is under the 50. Hands down, no doubt whatsoever, this is a bearish trend. So you've got a buy signal here that says maybe time to close your shorts. A bearish market trend. Then let's go look at market breadth. So market breadth is determined by the number of stocks on our buy list versus the sell list. So here's the buy list today. You've got a handful of names that came through today, like ARC, Apple, not Apple Computers, that's Apple Hospitality. You've got Davita Inc. You've got Moody's Corp. You've got Miniso Group Holdings. You've got O'Reilly Automotive, you've got Prague Holdings, you've got CarMax. All these would buy signals today. So we have 35 new buy signals versus 96 new sell signals. Like we've got a sell signal on Adent PLC, a sell signal on Aberline Corp. We've got a sell signal on Allstate, sell signal on A.O. Smith, right? So what we're measuring is how many buy signals and sell signals come through with our market breadth. So when we go over to the market breadth, the green line is measuring how many stocks we have for buy signals. You can see it's super cyclical, right? It goes up and it goes down, it goes up, it goes down. Now, over the last couple of weeks, I'd mentioned this before on every live stream that it had been going up, and I consider that times where it looked like people were starting to take off their shorts. So this had a bullish crossover on its 10 moving average, on its 10 EMA, but it actually looks like potentially by tomorrow, we'll have a bearish cross on that market breadth because we had 36 new, I believe it was, versus buy signals versus 96 new sell signals. So currently we're sitting on a bullish buy signal, a bearish market trend, and still bullish probably until tomorrow market breadth. Sector breadth, we could even take that one step further. If we go back to the watch list, and actually let me run my screener. Let me run my screener real quick. This is my screener criteria. I would not be looking to buy anything. But if you guys want to look to buy something, Here's a couple things that might be interesting to you. Paychecks Inc. Right, if we go look at Paychecks, so it's around $151 right now. Buy signal came through. Outlier signal returns 17%, and in the tech sector. So if we go look at Paychecks over here, we can see it's in an uptrend. We can see it's getting less fearful. It's at 61%, which puts it right between, it's in the greed area right here. I'll have new slides for that coming by later today. So this is getting more greedy. That's what we want to see. But this is in the tech sector. So let's go look at the tech sector breadth here. And you can see the tech sector, the breadth had really peaked up from people closing their shorts. But now it looks like they're going to start initiating more shorts. More sell signals are coming through. We see this crossover right here, right? So that's what the market is telling us, right? This is what we need to be listening to. But I would also recommend you listen to me. You don't have to, because I'm some random guy on the internet. But my name is Christopher Yule. I've twice been awarded top 100 people in finance. I was mentored by 5 of the market wizards, the best traders of all time. I've been successfully trading since 2009, and this is where outliers like us save time, make money, and start winning with less risk together as a team. So go ahead and subscribe if you haven't already. I want to look at a couple of trending stocks, and then I want you to start putting your stocks in the chat. Tell me what stocks you want to look at in the chat. I want you to put like Tesla long or Apple short, whatever. Put it in the chat, and we'll take a look at a few of those real quick. But I have this resource that I want to look at. So Tesla, we already looked. Actually, let's go deep dive on Tesla real quick. So first off, we already talked about the SPY signal, the market trend, market breadth. Let's go look at Tesla itself inside of Outlier and see what it's telling us. So Tesla is sitting on 38%, which puts it inside of the fear category right there. Now, it still has an active buy signal. Like I say, you definitely could have made some money on the buy signal before the heat map started to reverse, but there's still an active buy signal. Still within a downtrend, though. Your 10, 20, 50 is still crossed down. So all of that is bearish to me. Then the discretionary sector started to get a little less fearful, but now it's starting to get more fearful again. So Tesla, to me, does not at all look like a great buying opportunity. Let's look at another one. Let's look at Nvidia. Let's look at Nvidia. All right, so Nvidia is still sitting on a buy signal as well. It's kind of been drifting sideways to down. It's currently sitting at 24%, which would put it in extreme fear on this side. And the fear had been actually getting a little bit less, but it might have peaked and might start to come back the other direction. The tech sector as well is starting to get a bit more fearful too. You've got your 10, 20, 50 still crossed down. So for me, Nvidia looks more like a shorting opportunity than a buying opportunity all day. And if you're ready to save time, make money, and start winning with less risk, I really encourage you to head over to outlier.com and get the annual pass. It's only 82 cents a day. If you have the monthly pass, you can click and save 64% with just one click. But be sure to come back this afternoon where outliers like us will save time, make money, and start winning with less risk together as a team. Now, YouTube is going to pop up a couple recommended videos. I recommend you click one of those, and I also recommend you have a great, fantastic day. We'll talk soon.